Monaco 64, home of alternative economics and contrarian views. Yes, the Federal Reserve and the FOMC are meeting this coming week. The Federal Reserve is expected to raise the Fed funds rate on Wednesday by 25 basis points to 5%. The target will be between 5 and 5.25%. And many analysts expect it to be the last rate hike. What do I think? I'm not too sure, but whatever happens, the Federal Reserve has baked inflation into the cake for the last 22 years. And we're going to look at that today and why the bull market in precious metals is just beginning. The next leg up is just beginning. Yes, we're hovering around the 2000 level in gold, and in silver we're still at 25, and there seems to be a lot of complacency. Very few people looking at gold and silver, and that in of itself is a good thing. So I want to show you this chart here, and I took the data from the Federal Reserve Bank of St. Louis, their FRED website. So we've plotted here the Fed funds target rate, effective Fed funds target rate versus sticky price consumer price index. And this is going to show you why I said inflation has been baked in the cake. And of course, inflation is the creation of currency and credit out of thin air. And in the fiat currency world that we live in, of course, that is translated into more and more debt. Is it any wonder that we are almost at 32 trillion in the US national debt? Overall debt in the world is over $300 trillion. The CBO is talking about the debt held just by the public to almost double to 50 trillion by 2033. It's crazy. And this policy of inflation since the beginning of the century is the major reason why. And it's why I don't think the inflation problem is over by any stretch of the imagination. So as you can see by this chart, September 2001, that was when rates went below the sticky price inflation, as you can see here. And it stayed below that level up until January 2005. So for almost 4 years there is the excuse of what happened, of course, in September 2001. And those rates were kept below the rate of inflation. So we had negative real rates. And it was only from January 2005 to March 2008, so just over 3 years, that we actually had positive real interest rates as per the Fed funds rate. And as you can see, ever since then, so how many years is that? 15 years, we've had negative real rates. So yes, we've been told that the real rate has been positive for the last few years, that we have zero inflation. But as the chart here shows you, that's far from being true. And we're still way below the sticky price consumer index here, as you can see. So even if the Fed raises rates to 5 or even 6%, as I said, it's been baked in the cake for the last 22 years or so, with the exception of 3 years there from 2005 to 2008. And we saw what happened when they tried to raise rates above the rate of inflation. Well, it created the biggest financial crisis since the Great Depression, since the 1929 crash. That was the great financial crisis of 2008. So can you really imagine the Fed and other central banks being serious about inflation? I can't. And we've seen recently economists coming out and saying that the US is going to have a new inflation target and it will be 3%. I've heard it's going to be 4%. So it's with that in mind, of course, that I've been stacking physical gold and silver. And that's what I always tell my viewers. You have to create your own central bank. You have to have gold and silver at the bottom of your liquidity pyramid, of course. And what you put on top of it, I think, should reflect the environment. And the environment we have now is one of stagflation. We saw that GDP for the first quarter grew at just 1%. So that's going to be the way forward. And we know that back in the 70s, we had the same environment, and gold and silver, they were the place to be, even though they have been the place to be, of course, since 2002. But what I think we're going to see now is a major move in the precious metals. And with that in mind, I've partnered with a new mining company called USGO Mining Inc. They went public on the 20th of April, so they're a brand new mining company. And I think that's a good way of exposing yourself to some risk. And it depends how risk averse you are, of course, to put some of your savings to work on top of your gold and silver central bank, so to speak. So USGO Mining Inc., yes, a brand new company. Its IPO was about 10 days ago. They raised $20 million at $10 a share from institutional investors. And as you can see, the stock is trading below the IPO price. And they have $17 million in cash. And you'll see how important that cash is going to be in trying to unlock a lot of value from USGO Mining Inc. So the company's CEO is focused on developing the Whistler gold and copper property in Alaska. So let me tell you a little more about the Whistler project. Well, it's a significant underdeveloped gold copper deposit with growth upside. It has state of Alaska mining claims. It is 105 miles northwest of Alaska's largest city, Anchorage. It's fully permitted for exploration. USGO Mining Inc. will also benefit from Alaska's Roads to Resources program to unlock mineral potential in the Alaska Range. And all the major miners have a presence in the area as well. Just keep that in mind. So let's look at some figures, the bottom line, which hopefully will show you how much of an attractive proposition USGO Mining Inc. is. Of course, you should do your due diligence. Don't take my word for it. Yeah, do your research. So the market cap is roughly around $110 million, and it has $17 million in cash. So that means it has an enterprise value of $93 million. So its resources were last calculated back in 2011, and they're calculated to be at 9.4 million ounces of gold equivalent, which means that you'd be paying around $10 per ounce. And the mean valuation for an equivalent project would be around $40. So off the bat, there's a potential for a 300% plus appreciation in the share price. And I said earlier that the property hadn't been developed. There's been no drilling since 2011. So just think of all the advancement in technology for drilling that puts a lot of potential in the new drilling, and the new drilling is going to be done over the next 2 years. And US Gold Mining Inc., of course, has the resources to do so. The $17 million, that's what it's there for. So in terms of resources, Whistler has 3 million ounces of indicated resources, gold resources, and 6.4 million ounces equivalent of inferred gold resources. So as I said, the big key here in the next 2 years is going to be the drilling program to try to turn those 6.4 million ounces of inferred into indicated. And why would that be such a big deal? Well, because in the last 3 buyouts of projects that took place in the region in 2020, 2021, and 2022, they went for over $100 an ounce. So right now we're at $10 an ounce in terms of value. So that's why it's going to be very important the next 2 years, the drilling and the new technology for the drilling. That should give the company a lot of potential, I would say. The other interesting point about US Gold Mining Inc. is its ownership. It's 70% owned by Gold Mining Inc. They spun out the Whistler property, so they still own 70% of it. And there's only about 3 out of 10 shares that are tradable. So it's not like dilution will be a problem. So that's why I think US Gold Mining Inc. is an interesting proposition, not just because of the fundamentals in the precious metal space, the macro picture out there, and the central banks having no choice but to keep inflating, but also the fact that it's undervalued. Even on current resource numbers, it's undervalued. As I said earlier, it's only going for $10 instead of $40, but potentially it could go for $100, which would mean it would be a 10-bagger. And with that, I'd like to thank US Gold Mining Inc. as well for partnering with my channel. And I'd like to also wish you all a very good rest of the weekend. Take care. Bye.